All right, let's dive into one of the most important, most legendary investing books ever written, Security Analysis by Benjamin Graham and David Dodd. And look, this isn't just some dusty old book. For generations of successful investors, this has been the map to financial sanity. And you really don't have to take my word for it. Just look at this quote from Warren Buffett. He calls the book a roadmap that he's followed for more than half a century. I mean, that's incredible. So let's use that idea as our guide. Let's explore this map together. Okay, so first up, the Wall Street wilderness. Before you can really appreciate a map, you have to understand the territory it's for. And for most of us, let's be honest, the world of investing feels less like a clear path and a whole lot more like a vast, confusing wilderness. I mean, does that sound familiar? It really can feel like a casino, can't it? It's all driven by gut feelings, hot tips you hear from a friend, and just doing what everyone else is doing. When you push careful thinking aside for the thrill of the chase, investing starts to look a lot like just pulling the lever on a slot machine.
And that leads us to the big question, right? Is there another way? Can we swap the casino for a compass? Can we actually replace all that frantic guessing with a disciplined, logical approach? Well, that's the exact problem that our guides set out to solve.
And that brings us right here to Graham and Dodd's roadmap. So you've got these two guys, Benjamin Graham and David Dodd. Picture this. It's 1934. Right in the aftermath of the Great Depression, the financial world is in chaos, and they publish Security Analysis. This was their attempt to bring order to that chaos, to bring logic to the wilderness. This was the roadmap.
And the very first thing they do is draw this huge, clear line in the sand. On one side, you have investment, and that's defined by three simple things. You do your homework, that's the thorough analysis. You protect your original money, that's safety of principle, and you aim for a reasonable profit, a satisfactory return. It's a discipline. And on the other side, you have speculation, which is pretty much just everything else. This one distinction is the bedrock of their entire philosophy.
So, once you decide, okay, I'm going to be an investor, what's the most important tool the roadmap gives you? Well, it's this powerful concept that's designed to protect you from the market's crazy mood swings, and, maybe even more importantly, from your own mistakes. It all boils down to this incredibly simple yet brilliant idea. The goal is to buy $1 worth of a business for 50 cents. Now think about that. That 50-cent discount isn't just your potential profit. It's your buffer. It's your cushion for when you're wrong. It is your margin of safety.
Seriously, think of it as your shield. The margin of safety is that gap between the price you pay for something and what it's actually worth deep down. So if your research tells you a company's worth $100 a share, you only buy it if the price is, say, 50 or 60 bucks. That gap is the cushion that protects you. It doesn't guarantee you're always right, but it ensures that you can afford to be wrong sometimes without getting totally wiped out.
Okay, this next part is genuinely one of my favorite ideas in all of finance. Because having a margin of safety is one thing, but you need the right mindset to use it when the market's going haywire. So Graham came up with this brilliant little story to help us out.
He said to think of the market as a voting machine. I just love that. In the short term, it isn't some cold, calculating robot. It's a popularity contest. It's thousands of people voting with their money based on fear, excitement, greed, you name it. It's all about opinions, not always facts.
And here's the crucial part. In the short run, you have the chaotic voting machine. But the secret is that in the long run, the market becomes a weighing machine. Eventually, it stops caring about popularity and starts weighing the actual substance and value of a business. So your job, as an investor, is to use the emotional swings of the voting machine to buy things at a discount, confident that sooner or later, the weighing machine will prove you right.
And look, here's a perfect example right from the book. The price of General Electric stock got cut by more than half. Now, did the actual business of GE become half as valuable in that short time? Of course not. What changed was the mood, the sentiment, the vote. The price was just reflecting the public's manic depression, not the company's real worth. And that massive gap between price and value, that's where an investor finds their opportunity.
So, after this whole journey, after navigating the wilderness with our roadmap in hand, what's the ultimate secret that Graham and Dodd left for us? Well, the answer is both pretty profound and surprisingly simple.
This is it. This is the toolkit you've just picked up. It's not some crazy formula or a get-rich-quick scheme. It's a durable way of thinking. You now have the tools to tell investing apart from gambling, to always protect yourself with a margin of safety, and to see the market not as your master but as your servant,
one that sometimes offers you incredible deals.
And here it is, the punchline. The real secret to investing is that there is no secret. This powerful roadmap, the one that guided Warren Buffett, hasn't been hidden away. It's been sitting right there, out in the open for anyone to read since 1934. The path is known. The hard part is having the discipline to actually follow it.
Which leaves us with one last big question. Knowing these principles is one thing, but mastering our own emotions, the fear, the greed, the urge to follow the crowd, that's a whole different ballgame. If the roadmap is so clear, so timeless, and so effective, why does the casino always seem to be so much more crowded than the library? That's a question worth thinking about.